Right now, Wall Street is valuing a space company that literally just blew up a rocket on the launch pad at $130 billion.
Which is just a wild number to wrap your head around.
Right. And meanwhile, an AI embedded directly in your social media feed has just been granted the autonomy to generate its own video reality, like without a single human prompting it. Welcome to this custom-tailored deep dive, where we are looking at the massive trillion-dollar bets that are completely redefining human infrastructure.
Yeah, the concrete and steel of the past are basically being replaced by orbital networks and, agentic digital architectures.
Exactly.
The velocity of capital moving into commercial spaceflight and autonomous AI right now is just staggering. We are essentially watching a fundamental rewiring of global logistics, telecommunications, and media creation happening all at exactly the same time.
And since you want to stay well-informed without, drowning in all the noise, our mission today is to decode the stack of sources we've got. It's a mix of July 2026 financial analyses, market reports, and some pretty raw investor sentiment. We're breaking down why trillions are suddenly flooding into these two sectors and what these astronomical valuations actually mean for you in the real world. So, okay, let's unpack this. To understand the current market frenzy, we really have to start with the macro picture.
You have to, yeah.
Because the entire sector's gravity is basically being distorted by the new benchmarks set by Elon Musk and Jeff Bezos.
Right, and the financial anchor point that essentially reset the entire aerospace sector happened just a few weeks ago, June 12th, 2026, with the SpaceX IPO.
Oh, that was huge.
It was. That single event forced institutional investors to entirely recalibrate how they value space access.
I mean, the stock pushed SpaceX's market cap to $2.52 trillion right out of the gate.
Yeah.
Trillion, with a T.
Yeah, a massive shift.
That puts an aerospace manufacturer in the exact same weight class as, like, Amazon or Apple. It completely shatters all the legacy valuation models.
Well, to justify Wall Street throwing that kind of capital at a rocket company, you really have to look at the underlying math of reusability. The core metric driving the whole space economy is the cost per kilogram to low Earth orbit.
Which used to be insane.
Exactly. Historically, that number was astronomical because rockets were entirely disposable. You fly it once, you throw it in the ocean. But SpaceX inverted that paradigm by mastering booster recovery. I mean, they have roughly 400 orbital recoveries under their belt now.
Right. So the Falcon 9 is currently operating at a cost of roughly $2,720 per kilogram to orbit, which is crazy efficient. They've optimized the cadence to the point where they flew 130 missions in 2025 alone.
Yeah, they operate a lot like a high-volume commercial airline at this point.
But, and this is the kicker, a $2.5 trillion valuation isn't just pricing in the Falcon 9, right? It's pricing in Starship.
Exactly. The market views Starship as the ultimate monopoly enabler. The design target there is to drop that launch cost from $2,720 a kilogram down to under $100 a kilogram.
Wow, under 100.
Yeah, and at that price point, you aren't just launching standard satellites anymore. You are enabling heavy industry, orbital manufacturing, and massive space stations.
Which brings us to Jeff Bezos and Blue Origin. Up until this point, Blue Origin was mostly funded by Bezos, just, liquidating his Amazon shares.
Right, the personal piggy bank.
Exactly. But for the first time, they've gone to the private markets. They're raising a $10 billion round at $130 billion pre-money valuation. So Coatue Management is leading with $4 billion, and Bezos himself is injecting another $2 billion. And there's this prominent investor in our sources known as Serenity, the white-haired god of stocks, who noted that this establishes a massive new floor for the commercial space industry.
What's fascinating here is how markets present execution against future existential threats. You see, investors are desperately seeking a hedge against SpaceX's dominance.
I really have to challenge the logic of that $130 billion valuation, though. I mean, SpaceX has a relentless weekly launch cadence. Blue Origin, meanwhile, feels like a heavily funded luxury concept jet that just hasn't proven its schedule yet.
That's a fair criticism.
Right. I mean, they literally just had a New Glenn rocket explode on the pad at Launch Complex 36. So isn't this just a bank of Bezos' vanity number? Why on earth is Coatue paying $4 billion for potential when SpaceX is already dominating the board?
Well, it's because the nature of orbital demand has structurally changed. We're no longer just launching a handful of geostationary communications satellites that sit up in orbit for 15 years.
Right, the whole model is different now.
Exactly. The future of telecom relies on mega constellations. We're talking tens of thousands of satellites in low Earth orbit that require constant replenishment every 5 years or so.
Oh, because they deorbit and burn up.
Precisely. So the total addressable market is large enough to support a duopoly. Coatue isn't buying a working rocket today per se, they are buying a geopolitical imperative. The U.S. government and global telecom providers literally cannot allow SpaceX to hold a monopoly on launch access. They are funding Blue Origin at a premium simply to ensure a viable second option exists.
Ah, okay. So the market is essentially paying for an anti-monopoly insurance policy.
That's exactly it.
That makes sense. And that sets up the next layer of this deep dive perfectly. Because we have these mega cap valuations based on decade-out potential, right? But how do you price a growing space company that is actively operating, executing, and actually generating revenue right now? Which takes us to the 7 Investing Group's latest discounted cash flow model on Rocket Lab.
Right, and this is where we transition from institutional theory to the gritty reality of rocket math. 7 Investing just ran their 11th iteration of a DCF on Rocket Lab. They projected the company's cash flows all the way out to 2041.
Okay, and what did they find?
Based on their fundamental math, they arrived at an intrinsic fair value of $45.12 per share.
But Rocket Lab stock is currently trading around $150 a share. That's an $80 billion market cap. So the market is completely ignoring standard discount rates to price in this massive survival premium. If the most optimistic fundamental modeling puts the intrinsic value at $45, Wall Street is effectively paying a $100 per share premium purely on the conviction that Rocket Lab will dominate the mid-tier defense sector. Here's where it gets really interesting, though. If the objective math says 45 and it's trading at 150, is Wall Street just completely hallucinating here?
Not necessarily. Let's look at the actual mechanics driving that conviction. Rocket Lab's current workhorse, the Electron rocket, has seen its production and launch costs drop to $5.4 million. But simultaneously, their revenue per launch has climbed to $9.3 million.
Right, so the margins are expanding rapidly, and that's largely driven by Department of Defense programs like HASTE, right?
Exactly. The DoD doesn't just need a standard ride to space anymore. They need suborbital, hypersonic payload deployment for testing advanced weapon systems and rapid response architectures.
So Electron acts as like a dedicated rapid response delivery truck, which lets them command a premium price over standard commercial ride shares where you're just packed in with 20 other satellites.
Right, you're paying for the dedicated custom service, and that operational excellence with Electron is really the proof of concept for their upcoming medium lift vehicle, Neutron. They are targeting $55 million per launch for Neutron, which places them directly into competition for big national security payloads.
But launching rockets is notoriously a low-margin, high-risk business. So the real value, and the reason I think the market is assigning that $80 billion valuation, is their space systems division.
Absolutely. If we connect this to the bigger picture, Rocket Lab's strategy is basically brilliant vertical integration. They realized early on that if you want a satellite in orbit, the rocket is just the transit vehicle.
Just a really expensive taxi.
Right. You still need star trackers, reaction wheels to orient the spacecraft, specialized solar panels, flight software, all of it. By systematically acquiring the companies that manufacture these components, Rocket Lab captures the majority of the margin on the entire mission.
Yeah, so they don't just provide the Uber ride, right? They manufacture the car, the engine, and the navigation system.
Exactly.
And their backlog figures reflect this pivot perfectly. Their total backlog has surged from $2.2 billion to an expected $4.3 billion by year-end. And a huge chunk of that is tied to the Space Force NSSL program.
Which is why the market isn't just valuing their current cash flow. They are heavily valuing Rocket Lab's transition into a prime defense contractor. There is a specific program outlined in the defense budget sources we looked at called the Golden Dome Project.
Oh, right, the Golden Dome.
It's an initiative estimated to be worth up to $175 billion over the next decade.
That's huge. And the Golden Dome requires this highly proliferated, resilient low-Earth orbit missile tracking and defense network. It demands thousands of interconnected satellites. So Wall Street is looking at Rocket Lab's proven launch cadence, their vertically integrated manufacturing, and they're pricing in the high probability that they capture a massive slice of that $175 billion pie. Like that $45 DCF model simply can't account for winning a generational defense contract of that scale.
Exactly. We are seeing institutional investors price space companies as sovereign security assets now, not just as traditional aerospace manufacturers.
Right. Now, the institutional math is fascinating, obviously,
Yeah.
but the retail sentiment is where the raw market psychology is really playing out. Looking at the RRKLB subreddit from July 2026, everyday investors are being absolutely merciless regarding Blue Origin's $130 billion valuation.
Oh, they do not hold back.
Not at all. One user pointed out the sheer absurdity of Blue Origin having, and I quote, one rocket, one satellite, and a pad explosion. While Rocket Lab has a flawless cadence of over 50 orbital missions, yet Blue Origin is valued at more than double.
It's a classic clash between fundamental analysis and what you might call pedigree pricing. Retail investors are frustrated seeing flawless execution get overshadowed by a billionaire's private venture that commands a premium purely based on unlimited capital reserves.
And the retail crowd isn't just complaining about it, they're finding their own hyper-growth bets. Which brings us to the collision of space and everyday telecommunications, AST, Space Mobile, or ASTS.
Oh, yes.
Simply, Wall-E recently updated their own DCF model for ASTS, and they arrived at a staggering intrinsic value of $170 per share.
ASTS is basically the perfect case study in how orbital infrastructure is merging with terrestrial utility right now. They're sitting on a $3.5 billion cash position, which heavily de-risks the capital expenditure required to roll out their Bluebird satellite constellation.
But the real catalyst here is the new joint venture with Rakuten, backed by up to $926 million in subsidies from the Japanese government for JLEO, the Japanese low Earth orbit deployment.
Right. And you have to understand, the physics of what ASTS is doing is incredibly difficult. To connect a standard, unmodified smartphone directly to a satellite hundreds of miles away, you have to overcome the inverse square law of signal degradation.
Because the phone's antenna is tiny.
Exactly. You can't put a massive antenna on an iPhone. So ASTS puts massive football field-sized phased array antennas in orbit instead. They literally unfold in space and act as highly sensitive cellular towers capable of catching those super faint terrestrial signals.
It's wild technology. But I was looking at the Reddit comments on that Simply Walshian $170 valuation, and the community's totally polarized. Half of them are calling the model trash, while others are mapping out a trajectory to $748 a share.
The spread on expectations is massive.
But here's my question. Are we seeing a dot-com-style bubble in space stocks, where any company with a cool satellite rendering just gets a billion-dollar valuation? Because Japan isn't injecting $1 billion just to eliminate dead zones in rural areas, right? Are they viewing this as a sovereign security measure? Like if terrestrial towers go down in an earthquake, a tsunami, or a geopolitical conflict, a space-based grid is virtually untouchable.
That is the exact point, and it raises an important question about utility versus exuberance. It is easy to look at retail investors projecting $748 share prices and compare this to the dot-com bubble. I mean, the exuberance is certainly parallel. But the underlying fundamentals, like sovereign nations injecting nearly $1 billion to secure these networks, showed that space is no longer just for exploration.
It's critical global infrastructure.
Exactly. The utility is deeply rooted in national security. Japan is funding a resilient, fail-safe telecommunications grid. The hardware just happens to be in low Earth orbit instead of bolted to a tower in Tokyo. If we connect this to the bigger picture, space is basically becoming the new cell tower.
Okay, so we are pouring trillions into autonomous rockets and space-based cell towers. That covers the physical infrastructure. But there is a missing link here in our sources. If ASTS and SpaceX are building the orbital pipes to deliver uninterrupted global internet, what exactly is flowing through those pipes?
Ah, right.
It requires zero human intervention to beam the signal down, and increasingly, it requires zero human intervention to create the media you consume on the other end. That brings us to Elon Musk's newest frontier, autonomous digital infrastructure.
The convergence here is striking. Both the physical rockets and the digital algorithms are capital-intensive machines designed to operate at massive scale, entirely without a human in the loop. The newest update from XAI regarding their Grok model really illustrates this perfectly.
Yeah, our sources detail that Grok, which lives directly inside the X platform, has integrated a tool called Imagine Video 1.5. It allows for high-fidelity image-to-video generation from a text prompt in under 15 seconds. And Musk is projecting Grok will generate full-length movies by the end of 2026, which drastically intensifies this whole arms race against OpenAI's Sora and Google's Veo.
Generating a video from a prompt is impressive, sure, but it is still a reactive process. The true paradigm shift in this update is the introduction of what they're calling agentic mode.
which is the feature that completely alters the user experience.
Mm.
Because instead of a human typing in a prompt and waiting for the AI to render a video, Grok can now autonomously decide when to generate visual content based on real-time data.
Right. Giving Grok agentic mode shifts it from being just a passive search engine or a chatbot into basically an algorithmic day trader of media.
I love that comparison.
Yeah, but instead of autonomously trading stocks based on market signals, it is autonomously rendering and publishing media based on social sentiment.
It's wild to think about. It monitors the fire hose of X data, spots a trending narrative, say a breaking news event or some viral cultural moment, and autonomously synthesizes a video explaining or satirizing that trend, injecting it into the feed before a human creator could even open their editing software. I mean, giving an AI agentic mode to make videos without being asked is like handing a paintbrush and a camera to a hyperactive toddler and letting them redesign your house while you sleep. So what does this all mean for us as consumers?
Well, the true competitive moat here isn't just the rendering speed of the tech, like imagine Video 1.5, it is the distribution network. Because Grok is deeply embedded into the architecture of XAI instantly possesses one of the largest deployments of autonomous AI video generation on the planet.
Because it's already on everyone's phone.
Exactly. They completely bypass the friction of acquiring users for a standalone app. The agent is already live in the feed of hundreds of millions of users, actively participating in the global conversation. It shifts AI from being a passive tool you use to an active participant in your social media feed.
And it's important to note, our sources explicitly point out that despite living on X, and despite Musk's historical affinity for things like Dogecoin, this XAI update involves absolutely zero cryptocurrency or blockchain integration, not a single token.
Right, which is a deliberate signal to institutional investors. This isn't some speculative Web3 crypto play. This is a pure AI infrastructure rollout.
It is a closed-loop engagement engine. The AI monitors human engagement, generates content to maximize that engagement, and feeds it right back into the stream. So let's take a breath and recap the sheer scale of the journey we've taken today. We started with SpaceX's jaw-dropping $2.52 trillion valuation, fueled by the brutal economics of reusable rockets pushing launch costs under $100 a kilogram.
And from there, we examined Coatue and Bezos injecting billions into Blue Origin at a $130 billion valuation, simply to ensure the U.S. maintains a competitive duopoly in orbit.
Right, we then grounded those institutional numbers in the fundamental math of Rocket Lab, dissecting that massive spread between their $45 intrinsic value and their $150 market price. We saw how the market is pricing in their transition from a launch provider to a prime defense contractor, poised to capture that $175 billion Golden Dome initiative.
Which naturally led us to look at how that same hunger for resilient infrastructure is driving massive valuations for AST SpaceMobile, backed by Japanese subsidies to turn space into the ultimate fail-safe cell tower network.
And finally, we looked at the data flowing through those orbital networks, analyzing how XAI's Grok is utilizing agentic mode to build an autonomous, self-generating digital reality directly on our social feeds.
The through line connecting every single one of these data points is undeniable.
Completely. The infrastructure of tomorrow does not look like the concrete and steel of the past. Whether it is a reusable booster landing itself on an autonomous drone ship to deploy a broadband satellite, or an AI agent proactively rendering the media you will consume on your commute, the common denominators are total autonomy and unprecedented scale. The foundational rules of how our economy, our defense grids, and our information diets operate are being permanently rewritten.
And we were watching this fascinating divergence. While humanity is spending trillions to build rockets that autonomously return to Earth, we are simultaneously building AI agents that autonomously generate entirely new digital worlds. As these physical and digital infrastructures mature and interlock, the real question for you is, when the internet is entirely beamed from space and the content on it is entirely generated by sovereign AI agents, what exactly is the role of the human operator in the middle?
Wow. Yeah, think about that the next time you look up at the night sky and see a satellite. Or just scroll through a video in your feed. Thank you for joining us on this deep dive. Keep exploring, keep questioning, and we'll catch you next time as we continue to decode this rapidly changing world.